whale alert. Everybody loves a good whale alert on Twitter and elsewhere. Someone just sent $330 million worth of Bitcoin to Bitfinex, the crypto exchange. We don't know who did it, but we do know that it happened because these are open networks and we can watch it happen in real time. It's fun. Anyway, this is an account that was accumulating a lot of Bitcoin when it was trading at a lower price. The move to an exchange suggests that maybe they're trying to take a little bit of profit as Bitcoin hovers around 30,000. Of note, Bitcoin is back above 30,000. At the time this was published, I'm assuming it was right below 30,000. So we'll see what happens. Let's talk about the whale alert phenomenon. I don't know, Adam, do you have any thoughts on this one? It is a cool function of the crypto economy that you can watch large transactions happen in real time.
Well, there's just more people who want to buy the price right now than want to sell the price, and that's causing the price to go. I'm just kidding. When we look at kind of the crypto market, for a long time, there's been sort of two sides to it. One side is sort of the philosophical side, and the other side is the number go up side. The number go up side, always super interested in what the people who are holding the biggest amounts, because obviously the supply on the market is relevant. And indeed, if you are looking to, again, like the trick to make money in cryptocurrency has always been to have enough money to have your fingers in all of the pies that you want to have them in and be able to have a long enough time horizon that you can sit through any sort of 3 or 4 year long cycle. So this type of move for this type of person would make sense to me that they would be taking some profit now, given sort of the pickups earlier. Do I think it has much of an impact? I think it'll probably lower the Gini coefficient, right? So the concentration of wealth, this is one of the most concentrated accounts I think that we have out there today. So when it divests, that means that things get a little more egalitarian, but it remains still a very large account, certainly, even if it does sell all of this. Jen?
Yeah, whale watching is fun for me, but that's it, right? I'm not here to make a quick buck, and I think that's important to bring up when we talk about these whales making massive moves. I think that this account cashed out just over $900 million, correct me if I'm wrong, and so that's great for this person. It's fun to watch, but I think it's always important to highlight that the price going up and down is not the only thing that's happening in this industry, and the other things that are going on are a lot cooler. Will?
Give me a break. The NFT shill on the show isn't here for the price action. Come on, that's not true at all. I don't believe it.
Dragged.
No, let's put this within some context here a little bit, and I'll leave Jen there just to burn a little by herself. MicroStrategy has. Well, you should feel a little embarrassed. MicroStrategy has about 140,000 Bitcoin. Marathon Digital is a Bitcoin miner, and they have about 10,000 Bitcoin on their books. Next to in the stack, in terms of the highest Bitcoin holdings by company, is Coinbase and Square with about 9,000 and 8,000 Bitcoin each. So whoever this individual is, they have as much Bitcoin as these very large companies. Not as much as MicroStrategy, but as much as Coinbase, which that's not really their Bitcoin, right? That's an aggregate of all these retail users. So I think it's just important to note that these whales do exist, and they have as much money and as much ability to put pressure on the price of Bitcoin, either up or down, as some of these huge companies. If you heard about Marathon or MicroStrategy, another company dumping Bitcoin in the open market, you would see some price action. So I think it is important to watch these whales. That being said, the information we have is pretty loose, right? We can only sort of see like where these flows are going. They might be going to an exchange. We don't even know if they're necessarily selling. We just know that it's sitting on that exchange, and maybe we can see if that address changes a little bit or not once they pull the Bitcoin back off the exchange. But we're kind of lost when it hits an exchange. I think that the coolest thing here, though, is to see that it's an open financial system, and you can see people start to divest and put money into different things. I'll leave it there, though. Give it back to Zach.
Yeah, I think that's always the fun part, right? You can track these flows in real time on the internet in a way that doesn't exist in traditional finance. Now, of course, there are downsides to that, right? You don't necessarily want to be associated with some of these large moves, and there are ways to sort of break the, not anonymity, but pseudonymity of these blockchain systems. So when you hear about people saying, hey, we need privacy tech in crypto, this is kind of what it boils down to, right? Not everyone wants, how much money they take out of their wallet to be news, to be talked about on CoinDesk. And so that's something that I think privacy advocates would say, we need to build systems that sort of maintain that public verifiability, but are also private in nature. Otherwise, these traditional financial players are not going to want to play in these markets, right? It's disadvantageous for all this stuff to be hung out to dry, as it were.